Sema hiya.
Poa. Ndo na niko poa.
Sasa?
Niko poa. Unanisikia?
I can't hear you.
Can't hear me?
Ian.
Ngoja kidogo.
Ian, can you hear me?
I can hear you.
You can hear me, yeah? But there's a lot of noise on the background, yeah?
Yes. Kuna some noise there.
So I'm thinking we call we bring in the Mr. Dandy.
Mr. Dandy.
Dairo.
Dairo.
Just a minute.
Okay.
Hello.
Mr. Dairo.
Thank you. Yes, you have been sent to an email. And it should be Gmail because the IT person is not here with me unless I confirm. Yeah, that's the problem. So just check your emails. Let me just talk to the IT person again. Because she has sent the email. Gmail. Yeah, you should be sending it there. Ian.
Yes.
Ian, confirm for me.
Mm-hmm.
The email you have sent to James Rugai.
James Rungai.
I can't hear you, Nani.
James
Rugai.
Okay.
Which email did you use? Let
me check from the database.
James Rugai. She's one of my EC members.
Jane.
She's the whole secretary.
Oh, James Rungai.
Yes. Which email did you use?
It is jsurungai at Gmail.
At Gmail, yeah?
Yeah, I can resend it to her again.
I resend it to her because she says she has not gotten it. That's the invite you have done it, yeah, for her to get in.
Yes.
Kindly do that. I want you to put Christine Longa. Madam, have you had it at your Gmail, yeah? Watu wanataka kusikunifidua kama hata mtu anamesa chakula kwa mdomo yake na alafu anatafuniwa. Now, Ian, yes. I want to bring Alice Jologe on board. Because we want to confirm. Electa is wondering how many people you have on your list.
On the
Kindly
list?
send. Electa, can you get to the Zoom so that you can confirm with Nani Ian before the people come on board?
Okay, let me add as a.
Yes.
I have to add as a panelist because I haven't started.
No, you're not. She just add her as a panelist for now, but she want to confirm.
Okay.
The number of people you have. Even with Nancy, Ama they come here, we confirm from my side.
Oh, let me see if I can send the list here.
Do this.
Yes.
You can share the list with us.
Yes. I want to add the people from AR. I haven't added them yet.
Kindly add the people from AR first, then you share the list.
Yes.
Then we see the next move. That's okay.
Yeah. Give me like 5 minutes to be done.
5 minutes?
Yeah. Okay.
So I go off. I might call Alice Jologe and tell her.
Yes, you can just call her. I'm muting so that I don't disturb in case. Yeah.
Okay, continue. You need to be very careful. Sasa this is anasema percentage very okay. Can you send Alice Jologe so that we can be talking with them? Mm. Mr. Well, how are you? Can you share for me the number for Mr. Deudi? I don't have his number and I want us to discuss something before people come on board. Yes. You also join us. I understand my IT person sent you the link for the panelists so that we can just have maybe housekeeping before we start the issue. Yes, I would like to talk to him also. Yeah, you can give the phone. It's okay. Hi, how are you? I'm fine. We have not spoken, but we have just done emails. I hope I'll be seeing your face, yeah? No, you should explain that. Anyway, now my IT person would like us to have housekeeping, just to catch up little together with one of my directors, so that we prepare ourselves before the people come on board from 11. So he told me that he sent you a link for the panel. Yes, his machine. He should have been copied, but if he has not been, I can request him. You know, the worst part is he is in Eldoret, I'm in Nairobi. So we are communicating with the phones. So if he has not been copied, let me tell him to resend the invite. Okay, no problem. I'm just doing it. No problem. Let me do that so that we can just have maybe 5 minutes, 6 minutes we talk before we bring the other team in, yeah? Thank you so much. Ian, you're turning it on now.
Yeah.
Then you sent to nani, anaitwa nani, the presenter amesema useme to Wawelo.
Okay.
Wawelo is saying that you send him the invite, yeah?
Yeah.
Because he's saying that his machine he cannot access it.
Yeah.
Alice Jologe says, God, Alice Jologe, can you stop wasting my credit? She's called Alice Jologe dot. Eh?
Alice Njoroge.
Our email address is Alice Jologe at Gmail. Eh? I'm trying, let me just look for it here because I don't want to give you the long. But she's one of our directors. How comes you don't have it, Alice? Jologe.
Let me look for it again.
No, I'm just, let me just give you it. It is important I give you it, yeah?
Okay.
Because it's Alice. Unasikia?
Yes, yes.
Alice.m.jologe. Umeshika?
Yes, alice.m.joroge.
Jologe at yahoo.com.
Or at Yahoo, okay.
Yeah, .com. Kindly send her because we need to start. She need to be on the panel so that we can just to have her in-house, whatever.
Okay.
Have you sent the 15?
Yeah, ndo nimetuma saa tu. I think it nini. So let me send you the list hapo kwa Slack for everyone.
So pia invite Billion Aquil.
Yeah, Billion will add as a panelist.
Okay.
Yeah, on both the emails. So let me send it now.
Ian?
Yes.
Send an invitation to the panelists to S. Wawero, Kaiti Light now. We don't have time. KPMG umewatumia to join.
Yes, let me resend to everyone mwenye ako hapo. Kisa kupata.
The panelists, Alice Joroge pia mtumie.
Alice Njoroge.
Hiyo nimekwambia alice.mjoroge@yahoo.
Hajapata hadi sahi.
Sijui sasa na nani anaitwa nani na anaitwa nani mwingine? Aquil, my director.
Yes, nimeweka both his emails hapo. Nimeweka hiyo birian.nungo na hiyo birian.aquiri@ikimcho.
Alice Joroge umemtumia, unajua I want to see her coming on board.
Yes.
Alice.
Umetumia Mr. Dhairu na
Dhairu, what about umetumia nini the speaker?
Yeah, nimetumia ni Dhairu.
I'm just talking the IT person. Email yako imetuma, just join please, madam.
Yes, kuna Regina na Dhairu.
Just 1 minute. Okay, please just join. You register first. Hey, that's weird because he was sending you the panelist. Yeah, use the panelist one, tafadhali. Ian, just a minute. Okay, just register so that we can be on the same page. Ian.
Yes.
Alice Joroge is saying that she's getting an email to register.
No, I've sent her for panelists.
She's saying the same. What about Birian?
I've sent Birian both his emails and I've resent.
Can you speak to the speaker? Can you talk to the speakers from your phone? Tell them that you have invited them to be online. We don't have time.
Okay.
Hello, you have received the email. Both of them, Gmail and hiyo ingine office. These people just waste time for nothing. Who is coming on board? I can't see anybody on board.
Sijaiweka online sai. Let me now put it online. Simefika 11.
Yeah, the link was sent to your email for here office. I will not be in a position. Let me Ian, I can't see you.
Yes. Okay. Ninatumia.
Where are my other participants?
Sijaeka on. I have not started the event.
But the speakers need to be there. I can't see them.
The speakers, they can enter if they are panelists, but for the other people, sija broadcast.
Alice Jologi hajaingia kwa nini? Umemgive permission. She's there. I can see Alice.
Yeah, I am Ian.
Hi.
Yes.
Hi Ian, how are you?
Fine, thank you.
Yes, I'm there
Have you
now.
gotten the invite, please? The email.
Let me send some
thank
more
you.
invitations to.
Ian, KPMG are trying to log in, yeah?
Yes.
And also the director. I hope you have not given director those issues of logging in. It's going to give me a headache. Please.
I've sent to everyone the link to as an approved member, an approved participant.
But mine has told me to log in.
Yeah, that even
so
KPMG.
Everybody is not having that problem.
Yeah, even KPMG are saying that they need to register. That's why I'm worried.
Hey, Stephen Wawero is logged in.
Yeah, that's what we are trying to. I'm talking to him to see.
Yeah, I can see you. I can see you.
You can see us.
Yeah.
I can see you.
Mercy, I'm supposed to read this profile of Dairo.
Yes. The director is coming. The director is coming on board.
Oh, okay. But if you want me to read, it's okay. I've opened another computer here. I can read as I speak to the mic. I have no problem.
Yeah, I can't. Well, can you see? We can't see you.
Oh, I not put video.
No, put video. You haven't joined in. You haven't joined in with video.
Yeah.
Done. Madam
Okay.
Director, I'm expecting my director to be on board.
Do you expect?
Have you seen the link?
Is it a must we put video?
Yeah. Have you registered? Ian, my director cannot get in.
Just 1 minute.
Billion Aquil. Ian, what is happening with the people? What is happening?
I'm turning the broadcast live now.
No, you can't turn it live.
Okay.
If you turn it live, we just need to do a few housekeeping before we need to get to know the speaker, please.
Okay. Yes.
Is he on? Is the speaker on?
Yeah, the speaker is on.
But we can't see you, Mr. Dairo.
Yes, Dairo.
Now you are visible. Thank you.
But you have joined in as Stephen Wawero, yeah? Okay.
Yeah, what is happening here? His machine has a problem.
Oh.
Yeah.
Yes,
so
yes, Toddy. How do you pronounce it? Todd or Toddy?
Toddy.
Toddy. Okay.
Yes.
Toddy.
Yes.
I have to put an American accent.
It's fine.
Now, I know we'll have so many questions from the industry in connection with what insurance companies can do in the era of COVID to maybe petition the minister as far as some taxes, as far as some relief are concerned. I know that will come up, and I know you are talking about the budget. I also know there is something to do with mergers and acquisition. we have so many, you know, 30th of June is the deadline for capitalization as far as the insurance industry is concerned, yeah?
Mm-hmm.
And so many companies are not compliant.
Okay.
Yes.
I am sure you'll also have so many questions to do with mergers and acquisitions.
All right.
So at least those people who have not been able to be compliant, maybe you'll need to advise them on what to do. Those people
Okay.
who are on the road and they haven't reached where they are going, maybe you'll also have some few questions from the underwriter. So in a nutshell, just prepare yourself that those issues may arise from the industry.
Okay.
The majority of the people who are joining in work in the finance department in the insurance industry.
All right.
So we might have a few questions here and there, particularly to do with the employees' compensation, to do with the tax returns,
Mm-hmm.
and mostly it will be on mergers and acquisition. I'm sure that will come up.
Okay. That is noted.
All right. Otherwise, it's good to have you on board. Hi, Director. We can see you. Welcome on board.
I can see you too, Alice.
Thank you. We were just having a few housekeeping issues.
Yes, it's okay.
Before Ian can turn people on, and we are running great 4 minutes, we were waiting for you.
Yeah, my internet is unstable.
Okay.
Yes, but I'm on.
So housekeeping issues before Ian can turn people on. Anything you wish to comment?
My internet. Just continue.
So if your internet has an issue, do you wish me to introduce Toddy?
Yes, I think it would be okay because I'm hearing you partly. You will introduce him. What I'll in case it's are we starting now?
No, we are not on. We were waiting for you.
Yeah.
We were waiting for you.
My internet is unstable. I don't know why.
But we can hear you very well.
Yes, yes. So Alice, just start.
I think. Okay. Ian, today you are good?
Continue, Alice.
Okay, thank you. Thank you, Director.
Yes, Alice.
Ian, I think we are good because the speaker is on, Director is on. You can turn people on.
Okay, okay, okay.
Call in the office, please. Yeah.
Yeah, I've turned the webinar on.
Just go to the office.
I think we have a number of attendees here. Yeah, we can give it maybe a minute as people start to join. See, there are a number of attendees. We're up to 15.
Hello?
Yeah.
This one today is not stable.
Ian, when you're done, you tell us because we can't see the other members.
Yeah, so far we are 37 people.
Wow, okay.
Yeah, who are joining in.
Let me welcome people then.
We have up to around 60 invited
people. Ian, there are people who are having issues with the registration.
Okay, let me sort that out.
Ian, when you have the numbers, just let us know because we can't see you.
Madam Agnes? Madam Alice?
Yes.
I think we are going to go. So far we are 39 people.
Okay.
Participants at the moment. The other attendees are 3 and 6 panelists.
Okay.
I think we can just start from there, if you are okay.
Okay. Good morning, everyone, and thank you so much for tuning in to this IIK webinar. We are privileged today to have our speaker, Mr. Todi Thairo, who is a seasoned and accomplished tax advocate and consultant with over 10 years of experience in tax and regulatory services, both locally and internationally. Todi has considerable experience in general, direct and indirect taxation, as well as regulatory practices of multinational and local companies in various sectors of the economy, including the financial services. Currently, Toddy is a tax and regulatory manager at KPMG, where his mandate entails extensive experience in the provision of general and specialized tax health, check, and optimal reviews, monthly withholding tax, and VAT compliance services. He also handles corporate tax training, transfer pricing, and international tax advisory, personal taxation, as well as customs and excise, as well as tax dispute resolution issues. We cannot ask for a better person to advise us on issues to do with tax and the budget that was read to us the day before yesterday. And we are privileged to have Toddy on board. Today, Toddy is also involved in offering strategic tax planning and tax advisory services in mergers, acquisitions, and reorganizations. As an industry, we know that 30th of June, the end of this month, is our last day to be fully capitalized in order for us to continue operating under the Insurance Regulatory Authority rules and regulations. And today, he will talk to us. He will tell us, those who have not fully capitalized, what they need to do as far as mergers and acquisitions and the organization of the industry is concerned. He also advises on investor taxation, tax advisory and due diligence review, tax training, employees compensation. We know we have people who will be leaving us who will have attained the retirement age. He will also talk to us about VAT deferred audits and certification. He has a diverse international tax experience, having been seconded to KPMG Germany Munich office in 2015, and currently he's the manager in charge of KPMG clients in Ethiopia. Toddy holds a law degree from the University of Nairobi. He's a practicing advocate, so issues to do with compliance will be fully addressed. And in addition, he's a fully certified public accounts of Kenya CPAK and a member of the Institute of Certified Public Accountants of Kenya, that is the ISPAC. Please, members, join me in welcoming Toddy on board as he talks to us, as he briefs us, as he breaks down the budget for us piecemeal, and so that we are all able to comply and we are all able to move together as an industry. Because we cannot be able to be hard clapping. I want to assume all of us have given Toddy one clap and we are good to go. Welcome, Toddy. Just to let you know, our director, Birian Akwili, is on board, but he's having issues to do with his network. So he has requested me to start on his behalf. My name is Alice Jeroge, and I wish to welcome all the other EC members on board, all the CEOs on board, and our secretariat. I wish to congratulate them for the job well done. Welcome, Toddy.
Thank you, Madam Alice, for that comprehensive introduction. And it's my pleasure, to be here before you guys just to see what some of the changes that may affect or that are affecting the insurance industry that are proposed to be brought in by the recent finance bill, that is the Finance Bill 2020. And also just before the finance bill was introduced, we also had the enactment of the Tax Laws Amendment Act 2020, which we'll also be looking at in terms of some of the implications that may be there for the insurance industry. And I'll just go straight to my presentation. Can everyone see the presentation? I'll take that as a yes, Alice. I saw your lips move, though you're on mute. So I'll just go ahead. So there are various proposals that have definitely been made, but we're just going to have a look at the budget as well, but very briefly, of course. So this is the format of our presentation today. Of course, we're going to have an introduction where we are going to be looking at we are going to be looking at an overview of the budget and what it looks to achieve for this year, and how some of those numbers in the budget have been affected, as well as some of the sort of like stimulus packages or measures that the government is putting in place, both during this time that we are facing this pandemic, as well as after the COVID pandemic. So after that, we are going to look at the proposals within the insurance industry. Those are the proposals both in the finance bill, and of course the finance bill is still being debated in Parliament, so it's not yet law. So those are still proposals. But then we have the Tax Laws Amendment Act that was introduced and enacted sometime last month. So that is already in effect. So we're also going to look at some of the VAT changes, as well as excise duty changes that may be affecting some of the members who are online today. Then we're also going to look at general proposals, as well as amendments that have already been done, both by the finance bill, being proposed both by the finance bill and those that have been enacted by way of the Tax Laws Amendment Act. These are general, they are not specific for the insurance industry, but I think it's important because they cut across all the industries. It will definitely also affect our members here, so we're also going to look at that. Then we're also going just to look at other proposals or other acts that have been amended. And then we'll also have a Q&A session. And as Alice said, some of the issues that members have expressed, that may affect them in terms of, for example, the capitalization that are required by the regulator and the deadline that is looming. Then we can also just have a look at that towards the end, and I'm sure there will be questions around that. So in terms of the budget, the theme of the budget was, of course, trying to stimulate the economy, safeguard livelihoods, jobs, business, and industrial recovery. And this theme is definitely advised by the condition or the situation that the country and the economy and the whole world actually that is facing right now because of the COVID-19 pandemic. I'm sure we know friends, I'm sure we know probably colleagues who have lost their jobs or lost their livelihoods or had salary cuts and stuff like that during this pandemic. So the budget is looking to try and help the businesses ride the wave at this time of the pandemic, as well as looking ahead post COVID. What then will the government be doing to try and stimulate the economy or bring back the economy to life? So that was the theme of the 2020-2021 budget that was read last week. And some of the highlights of the budget include the fact that the economy is projected to grow at a rate of 2.5%, and of course that is down from 5.4% growth in 2019. There is a drop there, and I'm sure the reasons for that drop are well documented because of what the economy is currently undergoing. And of course, the minister or the cabinet secretary also introduced various economic stimulus program and a post-COVID-19 economic recovery strategy that we are just going to see the highlights of those. On your screen, you will also see the targeted revenue collection vis-a-vis what the budget is. And if you just look at, for example, the budget, and of course, most of our revenue comes from tax collection. I think this also explains just how or why the KRA is quite aggressive at the moment. I'm not sure if some of them or have seen that shift from the KRA where they're analysis, asking you whether you filed returns, asking you, why has the tax, for example, reduced. It's all because of the huge target that the KRA has and the role that they have to play for the country to meet its budget. So that is basically a highlight of what the budget for the next year will look like and where the government expects to get most of its revenue. And of course, as I had mentioned, there are these programs that the government is looking at, both during this period of COVID-19 as well as post-COVID. And it's around stimulating the economy and bringing, just economy. So the sectors of the economy that have always contributed to our GDP, of course, those are the areas that the government is looking at. And then there are other areas such as, improving the education. Of course, there's the health, there's tourism. We all know right now is quite, has suffered quite a hit because of the ban in traveling and all that. So that is one area that the government is also looking at or strategizing on, just how then to bring that to life at least after COVID. So there are issues about resource mobilization, supporting small businesses, and we know that we've had those issues about how to finance the small businesses. I'm sure most of you will know of the effect that some of the proposals that had been there, like the one for putting a ceiling on the interest rates, and there was a lot of debate as to whether that was helpful or not. And banks ended up actually favoring financing the government rather than taking risk with small businesses. Of course, that was removed, so that is helping, and there will definitely be other measures that we will expect in the coming months, that will help, for example, revive the economy in terms of how well to support these small businesses. And of course, the government is also looking at partnering with the private sector to do some of the big projects. So those are some of the things that the CS proposed, and we'll definitely be seeing more measures coming in the following months. Of course, depending on how the COVID situation is progressing, but we'll definitely see the government doing more in terms of trying to improve these areas of the economy, so that by the time the COVID-19 is coming to an end, or at least the situation is well managed and the economy is ready to go back, then we'll be well placed, just sort of like to bounce back to where we were. So that is the budget analysis. And if you allow me, I would like just to move to the tax proposals in the insurance sector, because as I've mentioned, tax is where the government is looking to get most of its revenue. So you can be sure that there will be a lot of scrutiny in the tax environment. And of course, because of some of the sectors, like the sectors that maybe have not been subject to such taxes like VAT, we are just going to see some of the changes that the government is proposing. So at least from a finance bill perspective, there is the issue about just putting the period within which a complainant can appeal a decision that has been made by the insurance regulatory authority. This is just to make it consistent, because if you look at other legislations that provide for these appeal processes, like the Tax Procedures Act, for example, there are always these set deadlines that are there. And of course, it is to ensure that then matters are not dragging on forever. So, for you guys in the industry, just need to take note of that, because if you do miss that deadline, then it could also mean that your matter then cannot be heard. So that is just from a procedural perspective. So like I had said, the finance bill doesn't have a lot of tax measures or tax proposals that are affecting the insurance industry. But of course, the Tax Laws Amendment Act that is now in effect had some enactment or some changes that directly affect the insurance industry. And one of that is the introduction of VAT on services by insurance agencies, insurance brokerage, as well as securities brokerage services. But of course, for here, we are going to just look at insurance agencies as well as insurance brokerage services. Previously, these were exempt from tax, meaning that, exempt from VAT, meaning that no VAT was required to be charged for any services that were provided by insurance agents as well as insurance brokers to the underwriters. So now the Tax Laws Amendment Act has brought those services into the ambit of VAT, but we're also just going to look at some of the controversies that have arisen as a result of how the law is also worded. And we are just going to see whether there has been any progress in that. But at least from the intention of the government, the intention is to bring these services into the ambit of VAT, meaning that now, insurance brokers as well as insurance agents will be required to charge VAT on their services. Of course, the VAT rate changed from 16% to 14%. And some of the requirements for VAT is that there is a requirement for you to register for VAT. That is, if your service is VATable, there is a requirement to register for VAT if your annual turnover, if you project your annual turnover to be over Kenya shillings 5 million. Of course, you can always register for VAT voluntarily, but if your turnover is going to hit the Kenya shillings 5 million, then by law, you're actually required to register for VAT. So, of course, then most of the insurance brokers and agencies will be expected to register for VAT. And some of the obligations that you need to note while registering for VAT or after registering for VAT is that the filing of the VAT returns are due, or the returns are due on the 20th of the following month. So if you are talking about the month of June, for example, the VAT returns for June will be due by 20th July. Any VAT that is payable as well is also due on that date as well. So the date for payment of VAT and for filing the VAT return is the same. And just to give an overview of how then you come up with any VAT payable. Previously, when these services were exempt, then if, for example, those are the only services that you are providing, then you are not allowed to claim input VAT because, of course, your services were actually exempt. But now what you just need to know is that you just need to ensure that then you're recording input VAT, and input VAT here would be VAT on any purchases that you make, any services or any goods. And where now VAT is charged on you as an insurance broker or an insurance agent, you just need to know that you are now allowed to claim that. You're now allowed to claim that input VAT, meaning that for you, when you're accounting for your output VAT, which is VAT on your sales or VAT on your services, you need to take that output VAT and reduce it by any input VAT that you have claimed in that particular month. So the balance, if it's a positive, then it means that you need to pay that VAT to the KRA by the 20th of the following month. If the balance is a negative, meaning that your input VAT is more than your output VAT, then it means that you take that credit. Of course, no VAT will be payable for that month. And that credit, you take it forward to the next month to claim it against any VAT that will be payable during then. So the penalty, for failing to pay tax due, of course, it's 5% of the tax due. And the penalty for filing a VAT return late is 5% of any tax that is due, or Kenya shillings 10,000, whichever is higher. So you just need to note that now your invoices need to be classified as what we call a proper tax invoice, which of course will indicate your name. We'll have the date of supply. I'm sure these are some of these descriptions or some of these, some of these requirements you probably have them in your current invoices, but you just now need to ensure that your invoice is now accompanied by an ETR receipt or an ESD signature. So you need to procure ETR machines as well as ESD machines, because any invoice that then does not have that ETR receipt or ESD signature is then considered to be invalid. And for example, if an insurance company, of course, there is the issue about the insurance company as to whether they can claim that because their services are still exempt, but the invoice should still be proper, meaning that it should have all these.
Ian, we appear to have lost the speaker, please. Okay.
Hello? Hello, can you hear me?
Yes, I can hear you.
Today we appear to have lost you. Can you hear us?
I can hear you, Alice.
Yeah, it's okay.
We can't hear you, Toddy.
We can hear you. We are hearing you.
Yeah, it's okay. Alice, it's okay.
Okay. Thanks.
Ian, we appear to have lost our speaker.
We can hear him. Maybe the internet is maybe there's a problem with the internet. Are you okay?
I'm just wondering if it's from my end or if it's from Alice's end.
Yes, I think it's Alice's end because we can hear you well.
Okay. I'll just proceed. Thanks, Ian.
Okay.
All right. So, what are some of the implications that will be brought about by this change in VAT on the insurance agency and brokerage services? Of course, there is an additional administration burden for agents and brokers because you need to generate invoices. You need to ensure that they are accompanied by an ETR receipt or ESD signature. You need to ensure that the returns are filed by the due date. You need to ensure that any VAT that is payable is also filed by the due date. So this is an additional administration burden that was not there for agents and brokers. Then there's the issue that I mentioned about claiming of input VAT by agency and brokerage firms. So you just need to ensure that then you're accounting for your input VAT accordingly so that you don't lose on any of that input VAT. Then there's also increased cost of insurance policies. The expectation is that this might be passed on to the final consumer, because especially from the underwriters, because the services are still exempt, they will not be allowed to claim the VAT that you're charging them on insurance, on agency and brokerage services. So that means that VAT then becomes a cost to them, which then of course affects the prices of policies. Then, of course, the expectation from a carrier perspective is an increase in revenue for the government. So, like I had said, there have been several developments that have come after these changes on VAT, and this one is being led by ACI, the Association of Insurers of Kenya. So what happened is that ACI wrote a letter to the KRA seeking sort of like a clarification of what that change in law means. And of course, KRA, explained to them that, the agents and the brokers are now expected to charge VAT on their services. But there is an issue regarding one of the provisions in the law that applies to insurers, underwriters, for example, because the provision provides for insurance and reinsurance services as exempt services, but then it goes on to exempt some of those services, such as consultancy services, actuarial services. It goes on to exempt those services and says that those services will actually be VATable even if they're being provided by an insurance or an underwriter, for example. So the question here is, whether then does it mean that brokerage and agency services, now that it's not exempted from or it's not provided for as being VATable directly, does it therefore mean that it can fall under insurance and reinsurance services, and therefore meaning that brokerage and agency services are still exempt? So this is something that is still out there being debated on. Unfortunately, depending on how you interpret it, you're still expected to comply because the law is now in force. And what we understand is that ACI had engaged some of their lawyers to get a legal interpretation. We've not gotten a hold of whether that one has proceeded, but we understand that ACI is trying to deal with this because, as we have said, it's also affecting the underwriters negatively because they're actually going to get a VAT cost that they cannot pass on to the consumer that actually now becomes their VAT, or actually now becomes their cost. So these are still developments that we are monitoring, and yeah, we hope that some clarity will definitely come through in the next month or so, or few weeks, because some of the insurance brokers and agents are still not clear as to whether then they should be accounting for VAT or not. And even for the underwriters, they've actually resolved to sort of like hold on some of those invoices that they will be charged VAT. They will just not pay them immediately. But of course, you as a broker or an agent, once you charge that VAT, you're expected to pay that VAT in the following month, whether you've been paid by your customer or not. So these are some of the controversies that are currently ongoing in the industry, and we'll definitely keep monitoring that. Then there was the other issue of excise duty. I mean, this was just a matter of, clarifying because of the definition that was there in terms of, what is exercisable. And the issue here was the issue about other fees. For example, there are these other services that are usually provided by underwriters, for example. And the issue was these other fees, should you consider them as part of the license activities? Before, the way the law was worded, it did appear as if, even these other services that are provided by underwriters were actually subject to excise duty, even though, actually subject to excise duty. So now the law has been clarified, and it says that, only those activities that are licensed. So here, the license activities of an underwriter, for example, or the license activities of an agent or a broker, then those are the ones that will be subject to excise duty. But any other services or any other fees that are provided thereon, then will not be subject to excise duty. So at least that's a relief for the industry because of that clarification. And yeah, of course, the impact is that any non-licensed activities then should not be subject to excise duty. So that is excise duty and of course VAT. Those are some of the issues that directly affect the industry. And as I had said, we are also just going to have a look at some of the other general proposals, both under the Finance Bill as well as the Tax Laws Amendment Act. And of course, these ones will also affect some of you guys that are online today. So it's important we just have a look at that and how these may affect your businesses. So the first one is the issue about minimum tax. So what the government is trying to do is to introduce, has actually introduced a minimum tax, which which therefore means that they're essentially looking to tax even those businesses that are in losses. I'm sure you've seen a lot of articles around this topic. Why is the government looking to tax businesses, even those that are not making any profits? So that's what the government is trying to look at. And of course, there are exemptions in terms of who are supposed to account for the minimum tax. You're not supposed to account for minimum tax, for example, if your income is exempt under the Income Tax Act. And of course, it applies to incomes that are not from employment, residential, capital gains, mining or exploration, meaning that every other thing or any business that is subject to turnover tax. So if you're not exempted from that, or if you're not covered by those exemptions, then you're actually supposed to account for minimum tax. And the way minimum tax is going to work is that you're going to, I'm sure a lot of you are doing what we call installment tax. If you're December years, which most of you are, the deadline for the second installment is actually this Friday. So what will happen in future once this law comes into force, if it does come into force, is that you're going to be determining your minimum tax as well as your installment tax at a particular time. So for example, let's say this time that the second installment tax is due, you determine your second installment tax, and then you determine your minimum tax. And your minimum tax, you arrive at it as 1% of your gross income, let's say for a certain quarter, for example. So if you're talking about the second installment, then we'll be looking at the second quarter and comparing that minimum tax with the installment tax. So whichever is higher is what you pay. So for example, if your installment tax is lower than the minimum tax, then you actually pay the minimum tax. If your installment tax is higher than the minimum tax, so you just proceed and pay the minimum tax. There are some issues that are coming from the way the law has been worded. And of course, we'll just wait and see whether some of those proposals that were made for some of the amendments to the bill, whether they've been adopted in the finance, because the way the finance bill was worded, it's not clear whether the minimum tax will be claimable or rather will be credited against your tax at the end of the year when you're determining the tax for the year. So that is not clear. Of course, for installment tax, we know that at the time of paying the balance of tax, you actually take a credit of any installment tax that you had paid during the year. It's not clear whether the minimum tax will also be applicable like the installment tax, but we hope that by the time the Finance Act comes out, then some of those things will have been clarified. So that is minimum tax. There are also some proposals by the government through the finance bill to disallow some of the business expenses, which may or may not affect some of your businesses. There is the issue about membership subscriptions, and these are memberships to trade associations. We know that especially some of the members here, of course, there's a lot of money that also goes towards such subscriptions. So the law is looking to exclude that from being an allowable expense, meaning that you will not be able to deduct that in future if this law does come into force. Then for listed entities, there are some of the expenses like legal and other incidental capital expenditure that are being proposed to be to be disallowed. And the issue here is whether now this will how this will affect the stock exchange, the Nairobi Stock Exchange, because some of the expenses also include like all listing expenses. And if you have experience in listing a company, there are quite a number of expenses that are involved. So it's quite massive, some of the expenses that will be disallowed. Then of course, there are club subscriptions that are paid for some of the employees. Of course, now this one includes the recreational clubs like the golf clubs and those kind of clubs. So those ones will also be disallowed for tax purposes. Then there are also some expenditures that are incurred by mostly manufacturers and those kind of companies where they're required to come up with social amenities such as public schools, hospitals that will then benefit the surrounding communities. And some of this, especially at the beginning of a project, can actually be quite significant, but these now will be disallowable from tax. if the law does come into force. Then there is the issue of residential income tax. This may not affect the businesses because this is residential income tax, probably just affecting individuals. And the issue here is that the upper limit of the residential income tax, which is at 10%, has now been increased from 10 million to 15 million. So previously the upper limit was an annual income of 10 million, meant that then you will be applicable under the residential income tax, which is accounted for every month. So that upper limit has been increased to 15 million. So the other issue is on, I mean, these are some of the other proposals that the bill is looking to bring into place, which then affects, this is the issue of affordable housing. Of course, we know that the government did introduce sort of like this affordable housing scheme, but you do know that previously there was, the scheme that was known as Home Ownership Savings Plan, of which contributions towards that were actually exempt from tax. So the issue here now is that those contributions will no longer be exempt from tax. So the question here is whether then this will bring the issue, this will bring HOSP to an end, because and I think it's because of what the government is looking to do with its affordable housing scheme. So it looks like that home ownership savings plans scheme will sort of like die a natural death given this proposal. Yeah, these are some of the proposals around the home ownership savings plans as well, which I've discussed. And of course, there is the issue about taxation of pension paid to persons aged above 65. And Alice had just mentioned that, some of the members, some of the employees of some of the members are retiring, and the government, this is one of the issues that has caused quite some debate recently in the media. And the issue here is that they want now to tax the pension that will be paid to retirees. The government is looking to tax that. So this is one of the area that even us as professionals, as well as other stakeholders, we've tried to lobby to them. We've tried to lobby to the government. And if you had followed the changes that were there in the tax laws amendment bill, or the changes that were proposed in the tax laws amendment bill, this was one of the changes that was there. And of course, from the lobbying of various stakeholders, it was removed. But then, the government is trying to bring it again through the finance bill. So we just want to see whether then it will go through, given that it had actually been rejected before under the tax laws amendment bill. The hope is that it will be rejected, but we just wait to see whether it will be retained in the final Finance Act. Then there is also the issue about digital services tax, which may not necessarily affect your businesses directly, but this is a global topic about just how to tax some of these digital platforms like Facebook, like your Netflix, Showmax, and this kind of companies. Because what you find that is that even globally, for example, a company like Facebook, if you look at the amount of tax that they pay in the US, because of the way the laws are worded in the US, they actually end up paying very minimal tax while they're making quite a lot of revenue around the world. So a lot of countries are trying to see how best to tax this, and there have been proposals, in the finance bill to try and tax the digital services tax. And of course, what this means, because there are also proposals from a VAT perspective that these services then should be VATable. The expectation is that some of these services will definitely become more expensive for the end consumer. So this is also another topic that has generated a lot of debate in the public. But the expectation is that since it's something that is still very new, it's something that even other developed countries have not yet quite gotten the grasp of how best and how fairly then to tax this industry. We expect that there are going to be quite a lot of changes in terms of regulations, as well as in terms of how these are implemented in the coming years. It will definitely need to be refined as we go on. The other issue is on value-added tax auto assessments. For most of the members, maybe because you are not registered for VAT previously, you may not have experienced this issue. But what has been happening is that, like I had mentioned, for you to determine the VAT that is payable, you need to claim your input VAT, and that is VAT on your purchases. So what KRA has been doing is that, because you may have received a purchase and charged VAT for it, and for you it's an input VAT, but then on the other end, the seller of this VAT fails to declare it for VAT purposes. So what KRA has been doing through the iTax program is that they've been sieving through those input tax or input VAT that have been claimed by taxpayers. And if that VAT has not been declared by the seller, then they actually reduce it from your credits and tell you that you cannot claim this. So this has generated a lot of debate because it had not been legislated upon. There is no, or currently the law as is worded, there is no obligation for me as a purchaser to ensure that the seller actually declares their VAT. It's up to the KRA to follow up on them, but it looks like KRA is looking to sanitize this process and actually bring it into law, meaning that we'll be forced to be dealing with people who are sort of like tax compliant, because if you give me a service, or if you sell for me goods, and then I'm asked to deduct that or not to claim that as my input VAT, then next time there's no way I'm going to deal with you. So I'll be ensuring that I'm only dealing with with legit businesses, if you like, and those who are actually compliant from a tax perspective. So now that you guys are likely to fall under the ambit of VAT, this is something that then you should be expecting going forward. Yeah, then there's the issue about trying to expand the definition of license under the excise duty. Yeah, so those so it's just saying that excise duty, the license for excise duty will also apply to those activities that will be gazetted by the commissioner, for which an excise license is required. So this is just providing clarity, and of course, sort of like expanding that definition and giving that leeway to the commissioner to gazette other activities that may be exercisable. Then there is sort of like on a positive note, I'm sure most of the changes that we've probably discussed before do not sound good to the taxpayer. But on a positive note, there is what the bill is calling the voluntary tax disclosure program. So the voluntary tax disclosure program is a disclosure program where the government is encouraging taxpayers to sort of like do their own reviews and see where there have been compliance gaps in terms of the various tax laws. And what the government is proposing is that once you do that and declare that to the KRA, then they are allowing you, or rather they'll be remitting, or they'll be waiving penalties and interest. And that is sort of like staggered. The program is proposed to come in 2021. So if, for example, you make a declaration within 2021 and actually pay the principal within 2021, and the program also allows you to negotiate with the KRA a payment plan for the principal tax. So if you stick to that payment plan and pay the principal tax within the year 2021, then the government will actually waive 100% of the penalties and interest. If Then that spills into 2022. That's when you'll be finishing, or that's when you'll be paying the last of your principal taxes. Then only 50% will be applicable to you. And if it spills over to 2023, then only 25% waiver will be applicable. So this one is supposed to apply for the period 30th June 2015 to 1st July 2020, effectively 5 years, so to speak. So this is a program that we are quite looking forward to, because if in as much as you may try to be tax compliant, there will always be those gaps, and maybe some may not just be compliant. So this is a program that we are hoping that when it comes through, that most of the taxpayers can then take advantage of it and sort of like start on a clean slate going forward. Yeah, so those are the tax proposals. And of course, there are other proposals across some of the acts and regulations that there are no changes to the insurance act. So none of these actually apply to the industry. But of course, some of them then are to do with, for example, like the road maintenance levy fund, which is trying to clean up. I'm sure you've seen a lot of debate around the government wanting to bring back the issue about the tolls. So this one is to address the same. Then there's also the issue about private equity and venture capital funds. There needs to be a close look at this, and these ones will now be required to be licensed by the CMA and also regulated by the CMA. Previously, of course, these ones were not regulated by the CMA. Yeah, so there is also the issue about the Retirement Benefits Act. Of course, if you fail to submit the actuarial evaluation, and this is, of course, around the proposal that the government is looking to streamline issues around retirement benefits, and of course, as we've discussed, there are tax proposals to that. Yeah, and of course, there is the Insolvency Act, where the bill is seeking to rank KRA as a preferred debtor in the event of liquidation. So this just shows you the government's attitude towards how it's going to actually meet a part of its budget. As I had mentioned when I was starting this presentation, is that a big chunk of the budget will come from taxpayers through the KRA. So even if you're liquidating, then the Insolvency Act will rank KRA as a preferred debtor, meaning that you will first of all need to pay any tax that is due even at the time of liquidation before you can actually pay any of your other debtors. So this just shows you that the period that we are getting into, because of the kind of budget that we have, we should expect a lot of scrutiny and a lot of pushback from KRA in terms of them trying to collect as much tax as possible. But of course, as as tax advisors, what we always advise our clients is that just ensure that you're paying the right amount of tax, nothing more and nothing less. And of course, one of the mantra that I have as a tax advisor is that the best way of tax planning is actually tax compliance. As long as you ensure that you're compliant and you can avoid a lot of scrutiny, and you can avoid getting yourself into situations where you are now required to pay penalties and interest, then that should suit your business quite well. Yes, and that sort of like marks the end of my presentation. Of course, there were the other issues that that Alice had mentioned. I don't have the slides for those, so but I think I have something that maybe we can be taking questions as I prepare that. Alice.
Thank you, Todi, for a very elaborate presentation that you have done to us. I am sure our members have followed you through. When I check through, I can see there are few chats, there are few comments from people. Maybe as I request my members to continue putting in their questions and putting in their comments, I'll read for you 2 or 3 which have been highlighted. One is from Gershon Mwangi, who is asking, now that the VAT on services provided by agents and brokers is due, for example, by 20th of June, what would be the safest thing to do to avoid penalties, or has there been an injunction from what you know? Todi?
Yes, that's a very good question, Gershon. And to be honest, there hasn't been any injunction because I don't think anyone has moved to court yet. Like I had mentioned earlier, the information that we have right now is that Aki was sort of like seeking a legal opinion. And I'm not sure whether they have gotten that yet, because until they get that, that's the only time then they can move to court. So what that means is that because the government or the KRA is expecting, insurance agents and brokers to account for VAT, the safest advice that I will give is that, just account for VAT, because there seems to have been nothing that has either been taken to court or rather an injunction of the sort, or even a guideline from some of these associations as to how then their members can account for this. But you remember, Aki is mostly being driven by the underwriters. So, the underwriters, them, they're waiting for the invoices from the agents and the brokers, and whether you raise VAT or not, that is not their problem. So for example, if you don't raise VAT, that doesn't become their problem. In fact, if KRA were to come and you've not raised VAT, they cannot go to Aki. They will actually recover that. Sorry, they cannot go to the underwriters. They'll actually recover that or try and recover that from yourself. So my advice would be for you to account for VAT.
I'll request Mercy to read for me the second question because I appear to have lost it. Mercy, please.
I'll read one from Caroline. She's saying, hello, on the VAT element, what is your view in regard to the insurance brokerage fee? The law isn't clear on this in respect to its inclusion in the tax blanket.
Well, for insurance and services, they sort of like go hand in hand, and my opinion would be that it then also applies to to reinsurance services. But I think the question here then would be which reinsurance is this? Is it a reinsurance company that is outside Kenya, for example, or is it within Kenya? If it's within Kenya, then for me, it's very clear then the VAT is applicable. If the reinsurance company is outside Kenya, then an argument can be held as to whether that service that is being provided to that underwriter outside there is zero rated, for example. Is it an export of service? So this is an issue that is of constant debate as to whether then it qualifies as an export of service or not. So if these services are being provided to reinsurance companies out there, I will just urge maybe to get an opinion on that from a professional as to whether that will qualify as an export of service. Because if it's an export of service, then VAT should be zero rated and not 14%.
So if we get you right, what you're advising the underwriters is that when they are doing their declarations, they are the ones to give the full information, whether this was a specialized service or you did business which was vatable, which was subject to VAT. Is that what you're saying, Todi?
I'm not quite sure how exactly it works in the industry. Maybe you can guide me on that. But I will think that, yeah, if you need to know, if these services are being reinsured, I'm not exactly quite clear how then it works in the industry. do you also broker the services for insurance purposes, or do you just get the clients and refer them to the underwriter, and then it's up to the underwriter to know how then those services are reinsured? I'm not quite sure how exactly it works. Maybe you can elaborate on that.
What normally happens is that when you get a business and it is not within the remits under which you can be able to hold it financially, you have to reinsure that business. Some of the insurance companies are out of this country, other insurance companies are within in the country. Like we have Kenya Re, we have Zepri, we have Ghana Re, all those. Now the question they are asking is, when you place your business with Kenya Re, when you place your business with Ghana Re, what is the issue of, what is the law telling us about the VAT element?
I think that part of reinsuring, that one is still, it's still exempt, because insurance and reinsurance services are still exempt. What we say is vatable are the agency and the brokerage services, right? So if, for example, then there are agency and brokerage services are related to the reinsurance, then those would also be vatable. So the question would be, are those agency and brokerage services relating to reinsurance, do they relate to a company that is outside Kenya? Because if it relates to a company that is outside Kenya, then I think there's a chance to just have a look at that more deeply and just analyze that and see whether then that qualifies as an export of service.
Okay, I think we are clear on that now, Todi. The next question, Mercy. Oh, can I read? I can see Joe from Mombasa is asking a question whether VAT requirements from agents will apply to individual agents, bearing in mind that they will hardly get to 5 million. I think that's a self-explanatory question, but Todi, please try and answer.
If you don't get, then, and you're not required to account for VAT, right? So if you're not getting to 5 million, then VAT does not apply to you. So it's sort of like continue to apply as normally, like you've been doing. So yeah.
I think Ian, you can help me because now I can't see any other question. Are there any other comments that you can see that I cannot see? Ian?
Hi. I think there's this question from Luvisia. Was it answered? Are tied insurance agents affected by the requirement on VAT?
That's a good question, and I think it's still what I've just answered. And of course, from an industry perspective, there has always been that debate as to whether tied agents are employees or are consultants. But I think there has been, a case law, the UAP case. I don't know if many of you are familiar with it, that where they concluded that tied agents are more of consultants rather than employees. But of course, that has been appealed by the KRA until we get a ruling on the appeal. Then the applicability right now is that tied agents are consultants. So even if tied agents are then consultants and are individuals, then we'll definitely look at the threshold of 5 million. And what that means then is that if you project that your gross turnover is going to be 5 million, then you're actually required to register for VAT and account for VAT. And remember, once you register for VAT, whether you had hit the 5 million or not, it becomes an obligation each and every year, whether you hit the 5 million or not. So it's not year on year whether you reach the 5 million or not. So you just look at, for example, the first year when this one has come into place, then is my projected turnover going to hit 5 million? If it is, then I register for VAT. If not, I don't necessarily need to register, and I can review that when next year comes. So for individuals, then that's what you also need to know. And just what you need to know is that once you register for VAT, even if you're not raising an invoice in a particular month, you just need to ensure that then you're filing the nil return. Because if you don't file, even if you didn't provide any services for that month, then 10,000 will actually accrue to as a penalty. So this is something especially for the tied agents, because you may just find that I don't have any business this month, and then you probably forget to file the return. So you just need to know that once you register for VAT, then you need to be accounting for VAT, which includes filing any nil returns for any month where there are no supplies made.
Thank you, Teddy. Any other questions from the people? Can you see any other? What I would encourage our listeners, please, if you have any questions to do with the capitalization and you know that is coming at the 30th of June, if you have any issues to do with mergers and acquisitions, please post them through in the chat as Toddy is preparing to just give us a 2 minutes brief on what is happening. IRA team, if you're on board, I had requested Karai Muse to be on board. I had requested Trizaboro to be on board. Please, if they are on board, Ian, you can unmute them to be able to speak to the people.
Yes, I see that we have a hand raised by from Joel Rono.
Okay.
Yeah.
Allow him to go.
Yes, let me allow him to talk. We see. Yeah. Joel Rono, I think you're permitted to talk. If you unmute. Yes, Joel.
Hello. Hello.
Yes.
Are you hearing me?
Yes,
yes, I can hear you, Joel.
Yeah, thank you. I'm still coming back to the issue of the individual agents. Now, bearing in mind that majority of them come, they start doing agency, from a point of they don't really actually know how much they are going to make. Now, secondly, most likely then the underwriters will always want to make sure that the issues of VAT for them is they effect it as required. I will give you an example, for instance, for the service providers, for instance. The service providers like loss adjusters and risk managers and surveyors, what I've seen happening is that when they start business immediately, even before they know how much they are making, the underwriters are insisting that they must be VAT registered, for whatever fee notes that they're charging. So probably, Stephen, what would be your advice then for us? I mean, it means that even for an agent who is starting agency with zero, then they just need to register for VAT.
I think thanks, Joel, for that question. I think that's a very important question. And just to go back to what I said about VAT is that the issue about 5 million, that is a requirement by the government, right? By the law. And you also required, or rather, you can also register VAT voluntarily. So what I usually advise my clients, because someone may come and ask you that, of course I don't meet the threshold, but this particular person is insisting that they need an ETR invoice. And sometimes it's from a misconception, because you'll find that some people who charge VAT when you're not even registered for VAT, right? And for example, if I'm an underwriter and you're charging me VAT and you don't give me an ETR receipt, for example, I cannot be able, even if I were to be able to claim that, I will not be able to claim that that VAT. And even you cannot be able to account for that VAT, meaning basically that you're actually stealing from the government. So this one then will be driven by the kind of business that you have. If your biggest client is insisting that you're registered for VAT, I mean, you might as well just end up registering for VAT, because VAT is not supposed to affect your fee. If you've agreed that my fee for this particular agency is 100,000, then you're just going to still put your invoice there that your fee is 100,000, and then VAT of 14% on that, which is actually not your cost. It becomes the cost of the other person, right? So this one will be driven by the business, because if I'm an agent and some of the other agents have actually registered for VAT and I've not registered for VAT, that sort of also like puts me at a disadvantage. So my advice would be, if your client is insisting that you give them an ETR receipt or that you are registered for VAT, if it's part of the, the part of their KYC that you also register for VAT, then you should actually just proceed and do it, because otherwise then they will probably not do business with you.
Right, thank you. Thank you. Probably just a final one on the same, and this is probably to the ACI. I'm sure ACI representatives are here or they're hearing. Now, in terms of lobby, as we lobby, I'm sure there's a lot of lobbying going on the same, and there's, as you're saying, there is a matter in court or something like that. Now, maybe they could also look at probably even asking the government or advising them to have these only applied to corporate and partnership agencies, so that we can save the individuals, because I'm looking at it in terms of it is going to be really very difficult for individuals, because it means you have to have the ETR machine and all those kind of things. And you look at, I'm talking from the point of the kind of agents I see. I'm a lecturer myself at the College of Insurance, and I'm looking at the individuals that, the young people who are coming and they start doing agency, buying the ETR machine and all those kind of things. So probably for the ACI, as they look at this and the other stakeholders, maybe they could suggest that this should be applying only to the corporate and the corporate agencies and or partnership. At least those ones are, big entities, if I would say.
I think that's a fair point, Joel. That's a fair point.
I'm sure director has had the question, and I believe that is not for, that is not for TED to answer. It is an internal issue to do with robbing and how we need to present our cases from the various stakeholders on board. Can you see Billion? He's having issues with his network, I'm sorry, so he cannot be able to answer you, Rono. Any other hand that is raised up? The last one, Ian? Ian? The last one? Ian, was the director coming in?
Thank you, Alice. I don't have a specific response to that. As you can see, I'm participating from the House. The issue of tied agent, I think in recognition of the inconveniences, practice notwithstanding, the threshold is there. 5 million turnover. And if you are a tied agent, that probably will not meet that threshold. The practice could have been earlier that it was for good prudence. But now, given the implication and the inconveniences of monthly returns, I think from the underwriter's point of view, that practice may need to be revisited until an agent predicts that the threshold is met. Thank you.
Thank you, Birian. Any other had the last question?
Yes, we have a question, a hand raised from Jay Luvisia. I'm allowing him to talk.
Yeah, let him come in.
Luvisia?
Okay, thank you, Stephen, for that presentation. I think my issue still goes to the issue of tied agents. There is I had raised two issues here. Number one was on the practice. I wanted you to just, from a very practical perspective, give us a computation of a broker or an agent who has, for instance, been able to make 8 million shillings in a given year, or say 500,000 shillings in a given month. That's one. Then two, I'm still on the issue of tied agents, and looking at it from a very practical viewpoint. I am a tied agent of, say, Britam. I receive certain benefits from Britam. For example, I have insurance, I have mortgage facilities, I have car loan facilities, and so on and so forth. So do I still, am I an employee? I know you have tried to raise an explanation. Am I an employee by virtue of the benefits I get from the company? Or am I an independent contractor? And therefore I'm treated for tax purposes for that matter. So I want you to tackle those two issues. I want you to tackle those two issues. Thank you.
Maybe I can try to answer the second question with regard whether, because you are receiving employment benefits, whether you deem to be an employee or an independent agent or a consultant. These are some of the issues which were discussed or conversed in the case for UAP. And what they relied on is the definition of an agent by the Insurance Act. And based on that, the courts arrived at the conclusion that indeed you are consultants, even if you are receiving some employment, like maybe medical. So that issue has been fully settled, unless now, because I know KRA have appealed the ruling until maybe we hear from the now maybe the Court of Appeal. But that's the issue. But they relied on the definition of an agent by the Insurance Act. And this was the same case. This also case was discussed, I think they borrowed from Uganda, because Uganda had a similar issue. And the conclusion was tied agents are consultants. Even if they are receiving some of the benefits, which could be deemed to be employment benefits. I hope I've answered your question.
Yes.
Thanks, Steve. Yeah, in terms of the first question, you know, for computation, and I think this is something that maybe, you know, underwriters should consider sort of like trainings and sensitization sessions for especially for the tied agents, because, you know, once you register for VAT, then you need to be monitoring some of the expenses that you have, you know, business expenses for that matter. Because then for you to be able to reduce that VAT obligation, then you need to be claiming input VAT. So if, for example, you're making a sale for 500,000 and that's your service fee for that particular month, then your output VAT will actually be 14% of that 500,000. Of course, the assumption here is that you know, the fee that you've agreed with the underwriter is exclusive of VAT. If it is inclusive of VAT, then you will need to work backwards and have 500,000 as being inclusive of the 14% VAT. But assuming that it's exclusive of VAT, then you will need to add 14% of VAT on that particular fee. And then for any other business service or any other business expense that you've incurred and where you've been charged VAT, you need to be maintaining those receipts, you need to be maintaining those invoices, and those invoices need to be you know, supported by an ETR receipt or an ESD machine, because otherwise then you cannot be able to claim that input VAT. So let's say, for example, your expenses for that were 300,000, right? So you will have 14% of 500,000 as your output VAT, and then you will have 14% of 300,000 of your input VAT. And then whatever VAT you get as your output and your input, you deduct your input from your output. And whatever VAT remains there is what is payable to the KRA in the next month. So for the tied agents, you also just need to start considering how then you're going to be, you know, keeping your books. So you need to have some sort of like bookkeeping knowledge, if you like, and for you know, just to simplify it, it's just a matter of you can easily just look at your income and expenses. You know, your expenses, your receipts, just ensure if they're business expenses, just ensure that then you're placing, I mean, you're keeping them safe, you're filing them. You know, you can also just have a box in your office where you just store those receipts, and then at the end of the month, if you have an account who helps you with that, or if you're doing your own accounting, then it's just a matter of taking those receipts and calculating your input VAT, and of course taking your sale invoices for that particular month and accounting for VAT as well. So you need to have some sort of like bookkeeping on a month by month basis. But I think it would be important for the underwriters just to organize, a training for, especially for the tied agents, so that they can understand then what is expected of them, especially if the insurance underwriters are requiring you to register for VAT. And as Mr. Birian had said, maybe the underwriters then also just need to consider some of these requirements and probably engage the tied agents and see, are they expected to make or to meet the threshold? If they are not, then they can probably relax some of those requirements and then just allow you to then continue operating as you are. Because anyway, the risk is on the broker or is on the agent and not on the underwriter. But of course, also the underwriter just needs to understand that then if I'm not registered for VAT because I'm not meeting the threshold, then I cannot charge that VAT to the underwriter. So my invoice will just be for my service fee alone.
Thank you, Toddy. I'm told by Commissioner that Teresa Boro, please Ian allow Teresa Boro to say something. She would like to put more input on the VAT element on agents and any other comments from the regulator. Ian, please allow Teresa Boro to come in. Teresa.
Teresa Mburu,
Ian,
please unmute.
Yes.
Unmute.
Unmute.
Unmute her.
Yes, I have unmute her. Teresa, please unmute. She's still muted.
She's still on mute.
Yes.
Any question for the regulator, please raise your hand so that Ian can see you before we get Teresa to unmute. Raise your hand so that Ian can see you. Any question for the regulator, but specifically for VAT issues?
Alice, I think there are other questions on the Q&A that were not answered. We can answer.
Okay, just shoot one. We only have some 5 minutes. This webinar was supposed to run up to 12:30.
Yes, there's one from Owino. I'm not sure if it's answered. It says, now that the VAT rate has been reduced to 14%, what happens when you get suppliers still charging 16%? How is this treated?
Well, thanks for that, Obino. The issue here then is that those suppliers have not updated their ATR machines or their ESD machines, whatever they are using. And my advice for you would actually be, do not pay the VAT of 16%. Just tell them that you've charged me 100,000. My VAT is 14%. Is 14,000 and not 16,000. I will actually just pay them VAT with 14%. Then they will know how to deal with it, because that's what they should have charged you. So you should not pay what they charge you. You should pay what is right, which then should be 14%. So either you ask them to revise their invoice to with the 14% VAT, or just tell them to actually pay you less 2% VAT.
Okay.
I think we proceed with the next question, if you can see it, since we can't be able to have Teresa on board.
Stephen, can you see the next question?
Yes, there's one. Ian?
Yes.
There's one from Gelson Mwangi.
Mm-hmm.
He's just saying, comment on the insurance capitalization and the 30th June 2020 reference date. I think with the reference to the due date.
All right, so for the capitalization, of course, there is the deadline from the regulator, whether that is going to Whether that is going to be extended or not, it depends on whether you guys lobby for an extension. But I think from what we've seen is that there have been some other requirements, especially around capitalization, and for example, like just the issue about for the underwriters, the issue about separating the life and general business. And generally, from what we saw, or from what we've seen from, if we are to learn from that, is that, the regulators were not so strict in terms of saying that you've not met this deadline. So, you're not going to operate after this date. But I think it would be important also just to engage the regulator and see whether, people can get individual extensions or the industry can get an extension. But from the past, I'm not aware of any underwriter that that were stopped from doing business because they didn't meet some of those deadlines. So it remains to be seen what maybe the regulator is going to do this time around. But I know that, of course, given the financial muscle that some of the players have, or lack of, it meant that then there would be need for mergers and acquisitions. I'm not quite aware whether there are any that are ongoing. At least I've not been engaged to advise on any. But of course, there are issues that then should be considered, when these mergers and acquisitions are happening. There are quite a number of implications, and I cannot definitely be able to exhaust them under in a call, for example, or in a training. We definitely need to sort of like engage one-on-one, because these are, of course, they are different from one player to another, or from one transaction to another, depending on how that transaction is being structured. But of course, there will be issues around capital gains tax, but there are exemptions, when you're doing the recapitalizations or mergers and acquisitions, and there's a legal requirement, which I think here there will be a legal requirement that's requiring such restructuring. So that means that then there will be an opportunity to actually apply for a capital gains tax exemption. But from a VAT perspective, what we can say is that there was a change regarding transfer of business as a going concern. Previously, it was an exempt supply, but right now it's actually a VATable supply. I think it came in sometime last year, if I'm not wrong. So yeah, that is another consideration. From an income tax perspective, there are also some consideration regarding if there are any assets that are being moved from one company to the other, and the allowances that have been claimed, that were being claimed, and how then those will be going forward, whether you can transfer them at written down values or at net book values, the implications for either transfer. So there are quite a number of things that one needs to consider when it comes to the merger and acquisition, the restructuring, the recapitalization, and all that. And I think my comment would be, if anyone is undergoing that, then it's better for them just to get in touch with an advisor, just to guide them and ensure that then where tax, then these savings actually being made, and just ensuring that then you're actually being compliant.
Thank you, Tode. I think that I'll read the last question, and it will be the last one before we can actually now get a vote of thanks from our Deputy Director, Agnes Masharia. The last one needs, please clarify on the 30 days appeal on IRA divisions. It was one on your first right. Somebody requires clarity on the 30 days appeal.
Yeah, the 30 days appeal is, if, for example, the issue that is happening right now, if maybe, for example, the 30th June passes and you've not, you've not achieved the capital requirements by the regulator, then if, for example, they shut down your business, you can actually appeal that. But of course, this is an appeal to the tribunal, so you can actually appeal that decision by the IRA, just the way we have decision that can be appealed against, for example, the KRA. So it's the same that we are having right now, that you can actually appeal a decision of the. Therefore means that you now have 30 days to actually do that, to actually enter that appeal. If I can borrow from a tax perspective, what happens is that if that period of appeal actually lapses, and the KRA, for example, had raised a demand, and you fail to object and appeal against that demand, then that demand sort of like stands. It's sort of like you've actually accepted that demand if you don't do it within the required time. So I would assume that the same will probably apply here. Any decision that has been made by the IRA, for example, if you don't appeal it within the 30 days, then that decision sort of like stands. I think that's the best explanation that I can make. But I think I'm assuming there will be, because there needs to be a process under which now it can be said that actually IRA has made a decision. I'm not quite sure about whether there are regulations around that, but if there aren't, then I would expect that there will probably be regulations around that, because it needs to be clear. For example, from a tax perspective, what constitutes a tax demand is very clear. There are those requirements for what constitutes a tax demand. So I think there will also need to be that clarity as to what then constitutes an IRA decision. Is it just a letter, or does it? Of course, it will probably be in a letter format. But then, what needs to be contained in that letter? Because there are definitely a lot of communication that goes on between the industry players and the regulators. So there will definitely need to be a clarity as to what then constitutes an IRA decision. And if then it follows that format and you get that, then it will mean that you actually have 30 days to appeal that particular decision.
Thank you, Todd. I am told by my administrator that the commissioner is on board. Are you there, Kiptum? Ian, is he on board? Ian, is the commissioner on board?
Muting her.
Sorry?
I'm unmuting.
Okay.
Yeah. Okay. Kathy, you can unmute.
Commissioner, are you on mute? Are you on board? Okay, we appear to have lost him. Let me ask the director to come in to say one word and then hand over to the deputy director to conclude.
Thank you, Alice, for the good afternoon. This is our second webinar. I'll be brief. I recognize the immediate past director. I recognize the director-elect and the executive council, members of the Insurance Institute of Kenya. My comment is that this is the route to go. We are going to have topical issues. The engagements are even better, likely to be better than the physical ones, because we can post questions immediately. Our concern is pricked. Finally, I'll thank KPMG team, Bwana Tauri and Waweru. I think we will knock at your door once again very soon to try to dissect some of the tax issues and your area, various areas of consultation. Thank you. Have a nice day.
Thank you. Thank you.
Deputy Director, please, concluding remarks. Or the Director-elect. Agnes, please, unmute yourself. Ian, help Agnes to unmute herself. Thank you.
Thank you very much. Thank you very much, Alice. I want to take this opportunity to thank
our God, because he made it happen. Sometimes we plan things and they don't happen, but at least this has happened. This is our traditional IIK post-analysis dinner, but of course now with COVID things have changed, and that is why the director is saying this is the way to go. This would not have happened without our KPMG effective and efficient partners, Toby Dairo and Stephen Wawero. We are really, really thankful for what you have done today, and may God bless you so much. I also want to thank the IIK members, our Insurance Institute members, the insurance industry players, our stakeholders, our affiliates, IRA, and also the commissioner. I heard the commissioner is with us. IRA, AKI, AIBK, College of Insurance. These are our affiliates. And I also want to thank the Executive Council and also the Secretariat. It's been great. I know I came in late. We had problems with electricity, but I'm happy that the event has gone well. And they always say that we forget to say, to thank our MC for the day, Alice Njoroge. May I also thank you. Thank you very, very much for the good work and everybody. Thank you.
Thank you.
Thank you, everyone. It has been a very wonderful day, and thank you, Toddy, once more. Expect more questions either by email or by a chat, and there are requests that the recorded video to be circulated to members. I think we can make that possible to the industry, and thank you, everyone. Bye-bye. I think it's bye for now, Ian. Thank you.
Bye.
Thank you for having us. Bye-bye.
Bye.
Okay. Thank you.
Alice? Ian, can you remove people? I want to talk to the director.
You have to let.
Yes. Madam Alice.
Yeah. Oh, you. For all the members.
I can see like the commissioner has joined in. Can we allow him to say something for the people left?
He has left.
Oh, he has left. Okay.
Okay.
All right. All right.
Okay. So from there, I'm ending the webinar.
Okay.
The presentations and other questions will be hosted on our website.
Any questions that come through, put them on the website, then put Toddy to answer them.
Okay. Okay. Okay.
Yeah, how many participants did we have? I hope you have removed people, Ian.
61.
Not yet.
Okay.
Yeah, we had.
Please do.
We had
Please do.
61 people, yeah?
61 people, that's a good number. Well done, Secretariat. Agnes, can you hear us?
Yes,
Well
I
done.
can.
James
That is very,
Rugai.
very nice.
James Rugai, are you still on board?
Yes. Let me end the webinar, then we can create a different.
Okay. Okay.
Yeah. Okay.
Okay, but any questions that come after this, put them on the website, and let's get Toddy to answer people.
Okay. Yeah.
Thank you.